Okay, welcome guys. Welcome to another episode of Market Wrap with our research head, Mr. Pankaj Pandey. Pankaj sir, good evening. Welcome to our show.
Hi, good evening, Gaurav.
या तो सर लास्ट वीक वापस वही हुआ जो आपने कहा था कि 21,000 वुड बी अ वेरी स्ट्रॉन्ग सपोर्ट एंड जब तक 21,750 लेवल नहीं निकलता है ऑन दी अपसाइड वी विल नॉट सी एनी मूव. आई थिंक निफ्टी वाज बिटवीन दैट 600 650 पॉइंट रेंज बिकॉज 21,130 वाज द लो, 21,750 वाज द हाई एंड निफ्टी वहां से फटाफट नीचे गया एंड रिकवरी भी ठीक ठाक आई है एंड वी क्लोज समवेयर नियर 350 लेवल. So let us next week we have an important event. Today we have GDP numbers of US, then we'll have Fed policy, then we have economic survey, and then we have the union budget. So four important events lined up. So what is your take on the Nifty, on the index, specifically going into next week?
So, Gaurav, this week our markets have largely lagged compared to global markets. So, while global markets are up 1 to 2 odd percent, we are down about 1 odd percent. And Nifty has corrected 4.5% from the highs. Now, our sense is that with the kind of events lined up next week, volatility is definitely expected, and which is why I would want to believe that the key support for Nifty would be about 20,800 kind of levels. I'll still look at levels of say 22,000 going forward because that is the level our sense is that market should eventually head towards once this volatility sort of subsides. And I think good part is that there was some news in terms of liquidity measures announced by RBI. But in the run-up to budget, our sense is that sectors or companies which have got exposure to rural areas, infrastructure, capital goods, PSUs, banking and financial services, I think these are the pockets which are going to remain in focus. So volatility is expected, but largely I think you'll continue to see stock-specific moves depending on how the earnings season pans out.
Absolutely. I think one good thing is that going into event we have seen correction. अगर ये euphoria में अगर event में जाते तो it would have been a bad thing. I think.
Absolutely.
Yeah. So, sir, this is what we are expecting on Nifty. So, 20,800 is the support, and you're expecting move towards 22,000. So, I'll take this 1,200 point as the range for Nifty moving ahead. Abhi, sir, last week we have got big bank ka results. Yesterday we had Axis Bank's result. Today there was a negative reaction. We had Kotak and ICICI as well. Obviously, we do not cover ICICI, but you would have definitely had a look at Kotak and ICICI Bank, Axis Bank's results. So, what is your take on the results of these two private banks?
So before I come to that, I think one problem with the banking sector has been that largely, if you look at one pattern, is that the deposit growth has been challenging for most of the banks. Short-term rates have gone up, and which is why there was pressure on margins. The liquidity had sort of turned to a deficit of nearly 3.4 lakh crores. A good part is that RBI came up with liquidity infusion of 2.5 lakh crores, so that sort of cooled off the short-term CD rates. Which is a good move. And our sense is that going forward in future RBI policy, if RBI reverses their stance to on the liquidity side, I think that will be a first sign before rate cut happens. Not saying that rate cut is going to happen anytime soon, but we need to see how the Fed policy also sort of pans out. But like you said, we are light into market. So overall, it's a good sign for the markets overall. At least Bank Nifty will not drag the markets further down. That is what it looks like. Now coming to stock specific numbers, see Kotak numbers were quite decent with say 16% kind of advances growth. And what they are focusing is on high yielding segments. So be it personal loans, be it credit cards, or be it microfinance loans. And that is contributing about 12% of their book. Asset quality level was largely stable. Deposit growth has been also quite good at 18 odd percent. So overall, nothing much to complain in Kotak Bank numbers. I think the overall challenge is that one, historically it has always outperformed. We are still not too sure how the new management will chart out the growth going forward. So these are some questionables where we don't have enough clarity. So which is why probably Kotak may not really sort of outperform the market. Axis Bank numbers were also quite decent. So business growth was healthy at say 22%. Deposit growth again was okay at 18 odd percent. Good part with Axis Bank is that it's trading at decent valuations of under 2 times. And so overall, this bank is also sort of focusing on high yielding segments. to sort of mitigate the pressure on the margins. So that way, I think okay set of numbers. It's a good option to have in case HDFC Bank does not do well, which is looking like the case at this point in time. And then you have smaller banks like, say, IDFC First Bank. So IDFC First Bank, nothing much to complain. It's just that the stock had done well. Otherwise, momentum was maintained. They've grown their advances by 25%. Margins have also sort of improved. Largely, they are focusing more on the retail book, and which is why their margins are one of the highest. Because their corporate loan book or the higher infrastructure loan book, what they had, they've been shrinking that. And they've been shrinking their high cost deposits as well. But whatever they had come out with long-term plans that they've achieved, I think they have come up with version 2, so where they're targeting 20% kind of a growth and closer to 2% kind of ROAs. So nothing much to sort of complain there. Only thing it has sort of done very well. I think one worry could be that if you're focusing on high growth segments, especially retail, and your cost of deposit is so high, so probably the challenge is that they don't, hopefully they don't run into any asset quality problems. So that is the only risk, which is what one would sort of associate with IDFC First Bank.
That was my actually the question to ask you, that IDFC First Bank historically is one of the highest, which has the highest cost of funds on its books. So to maintain that, and with RBI's recent measures of risk, increasing the weight on the RWA, how does this bank? What is your main target, and how do you see this shaping ahead for this bank?
So that is the only sort of a concern one would have, because if your cost of fund is so high, and so obviously if you're lending say 11-12% so obviously concern would be that you may not be getting the top-notch quality customers, and in case if there is a stress and that in that book, I think that is where the challenge could lie for the bank. Otherwise, on a higher base at 20% CAGR growth rate, what they are talking for the next 5 years is also quite decent. So I think asset quality is something one needs to sort of watch out for going forward.
Because to maintain the NIM, they have to have higher, like these credit card loans or personal loans, which give you higher yield. So, and that's where we are seeing NPS coming in. So that would be a challenge for this bank. That is my own personal take here. Sir, we had Indian Bank's result as well. And I think PSU side with everything is gold, I guess. You touch anything, everything will run. That's the situation there. What is your take on this bank?
So on PSUs, I think good part is that when you look at most of your private sector banks, the CD ratio is closer to 100% or in excess of 100%. I think when you look at, say, Indian Bank, the overall CD ratio is some 73 odd percent. And this is one bank which has already sort of crossed ROAs of 1%, and growth number wise also was quite decent. So advances growth was 13%, 10% kind of a growth in deposits. So nothing much to complain. I think this is one of the few banks which we have been liking for a long period of time within PSUs. Very less volatility compared to some of the names like, say, PNB in terms of asset quality and all of it. So this bank within the tier 2 PSU banks looks quite attractive, and valuations are also okay with 1.1 time adjusted book.
Sir, one question to add on the bank side. Seeing the CD ratio of private bank versus PSU bank, these guys are at a very comfortable ratio. I think sub 80 level pakad lete. So do you see PSU coming into aggressive lending moving ahead because they're sitting with a comfortable CD ratio? And going forward, if one has to invest in these PSU banks, NPA numbers will become important to see whether the performance is lending, and the NPA numbers will become important for these banks if someone's tracking it or wants to invest into PSU.
So I think on the aggressive growth side, it does not look like any of the PSU manuals is hinting towards a very aggressive growth, just because the private sector bank may not have that kind of a lending capability. So that way, I think they will continue to grow at their own sweet pace of 14-15 odd percent, which is the system level credit growth of what one would see. A good part also is that historically they've been lopsided on the corporate side, and now they have been sort of peddling growth on the some of the verticals like retail, agri, and even MSMEs. So that will help them in terms of pushing up or maintaining their margins. So compared to private counterpart, PSUs can keep on growing on a steady basis without much of a volatility, either in terms of asset quality or either in terms of growth metrics. And valuation wise, also compared to when some of these banks had sort of touched peaks, valuations were in excess of 1.5 time book for some of them. Most of them on a forward basis, FY26 basis, except for SBI, I think are about closer to 1 time book or below 1 time book. So valuations are also quite okay. So risk reward wise, PSU Bank look a lot more better, and I'm also sort of hoping on the fact that we might see rate cuts, and that might lead to better treasury gains for some of these PSU banks. So all in all, PSU look a better combination at this point in time compared to private sector banks.
Okay, so I know you. We have given a lot of PSU banks in as recommendations. I'll just repeat it for our viewers. We have recently recommended Central Bank of India in our Gladiator and Bank of Maharashtra. So these are the two banks that have been recently recommended. So you can have a look, seeing in our portfolio, seeing in the research tool on our website. So moving from banking to other sector results, that is your favorite sector. I'm assuming that is auto and auto parts. So auto numbers were good, but OEM side pay we did not see, like expectations were not met by the results. So your take on both the side and the peers that have declared the results. We'll start with Bajaj Auto.
So I think Bajaj Auto numbers came out quite good. So I think company posted one of the robust performances. So overall volume growth was 22 odd percent. Company did a top line growth of some 30 odd percent. Best ever EBITDA margins at 20%. And I think this is despite the fact that, see, typically three-wheelers contribute, say, 16% of the volume. So in this particular quarter, they have contributed 13%, and three-wheeler is the better margin product. So that way, despite that, the margins have been good. I think the company is talking very positive on the acceptability of Chetak e-mobility and also the Triumph bikes. So new product launches or new products are also sort of doing well. Only issue is that this stock is trading some 22, 23 times forward, so which is higher than the historical average. The other aspect is that export is a significant chunk for them, and they're still sort of suggesting that a lot of the importing or the markets where they are exporting, there is a shortage of dollars, and which is why the demand is still yet not sort of picking up. And that is going to sort of take time. So rich valuations, but very good set of numbers. Don't expect stock to sort of do phenomenally well because it's already trading at rich valuations unless something changes on the export side. The other number was for TVS. So TVS also did quite well. I think this is one stock which continues to sort of surprise on the positive side. Margin-wise, from single-digit margin, they have gone up to 11% this particular quarter. Quarter on quarter, there is also expansion margins. Their EV portfolio is already doing well, now contributing about 4.5% of their overall two-wheeler sales. So this company continues to sort of do well, and we have been sort of getting positively surprised in this stock every quarter. So good set of numbers even from TVS as well.
We are awaited for Tata Motor numbers as well because you are supposed to revise the target there. So any targets on Bajaj and TVS that we have right now?
So like I said, we are still looking at if there is some correction which happens. Otherwise, at
Okay.
this point in time, the valuations are quite rich. I think on the auto ancillary, if I have to add, Exide numbers were slightly below
Yeah.
expectation. We were expecting about some 16% kind of a growth rate because that is the overall OEM growth what we have seen. But the company delivered about 12% kind of a growth. Margins were also sort of flattish at 11.5%. But nevertheless, we continue to like this stock largely because this is the only company which is taking a good amount of tangible steps in taking up the lithium
Hmm.
and manufacturing. And so obviously they will have a first mover advantage. Our previous target was 335, and we are looking to sort of revise this target going forward.
Okay.
Balkrishna
Yeah.
Industries had seen a sort of a cut today. So I think while numbers looked okay, because if you look at last 4 quarters, the volume was declining. And mind you, this is off highway tire company with about 6% kind of a market share. Aspiration is to take the market share to 10%. But I think what spooked the stock was that company guided that the next quarter is going to be sort of flattish in terms of volumes, and there could be pressure on margins because of the Red Sea crisis. So I think that had a fair share of an impact on the stock. Otherwise, from a portfolio perspective, we like the stock. But yes, recovery is taking time in the stock, and which is why I think some of the investors' patience have given up today.
Yeah, especially seeing the move around everywhere, and when your stock doesn't perform, it gives you a kind of a FOMO move in the market. But sir, like tire stocks historically also are run by the crude prices, like because that is their major input. So if crude coming down from here, do you think that would be a good trigger for this sector, or this is just my guess? I'm asking.
So on tire, when you look at some of these tier one names like say JK Tire, Apollo Tire, or CEAT numbers had come in, so their margins are already at 15, 16 odd percent. So CEAT, I think last quarter was 15%. This quarter it came to about 14 odd percent. So while yes, you are right that the crude oil prices have come down and that will benefit, but we also track some of the input suppliers also. So for example, Philips Carbon Black. Now, our sense is that the prices for carbon black has gone up, and obviously that is going to pinch some of the tire companies because globally carbon black players are doing well, largely because Russia is being pushed out of the market. So our sense is that the margins have largely peaked for tire companies. We need to obviously see the results for other players, and which is why, on along with that, the kind of price performance they have delivered, plus margins sort of topping out. Overall, our sense is that probably there could be some consolidation ahead for tire companies. So I think so. We would want some price correction to happen before we look to sort of reachase them.
Okay, so for now, it's like anybody who wants to get into accumulation zone can look at these things, not for the ones who want to run ahead. Moving from tire, from we went from banking to tire to auto to IT, the important sectors are IT was the one which took Nifty to 22,000, TCS and Infi, but now we are again below 22,000. And we had results from Tech Mahindra and Birlasoft. Both had a negative reaction after they post their results, probably. So, what is your take on their result? Have they disappointed in terms of numbers?
So, Tech Mahindra, from a quarter number perspective, expectation was that the revenues will decline. Actually, the revenues had gone up by 1%. But I think in Tech Mahindra, a lot was riding on the hope that the new management will come out with future growth guidance, which they have now pushed it after Q4. So we will need to sort of wait for another quarter. Now, besides revenue numbers, most of the numbers are still sort of down. I mean, you look at Tech Mahindra, the EBIT margins were about 5.4%. Even if sort of exclude the portfolio restructuring, it's about 7%. Most of your IT companies make a high teen kind of a EBIT margin. So this company has a lot more room to sort of catch up. And even the TCV was soft. But our sense is that everything is there in the prices. This stock is trading at 13, 14 times and has a lot more room to catch up. Uh, Historically, it used to deliver growth by doing a lot more M&A, and now you see more of our organic growth, which is a sort of a healthier growth to look at. Only thing is that how much growth we would need to sort of wait up for one more quarter. So, which is why there was a sort of a disappointment. But I think any kind of a price decline is a good opportunity to buy because our sense is that even if they are able to achieve do a decent job, the stock should offer decent upside.
I'll
Birlasoft,
just add one more thing here, sir. Tech Mahindra is our yearly technical pick as well. So
yes.
viewers who are looking to add Tech Mahindra, you can look at the target and stop loss which was released by us in that report. Go ahead, sir, with Birlasoft. Yeah.
So Birlasoft, 1.8% kind of a quarter-on-quarter growth, good set of numbers, largely helped by short-term projects what they executed. So nothing much to complain. In fact, the numbers were quite decent. Deal TCVs were soft, but pipeline continues to remain good. Margins were good at 16 odd percent despite they giving high. 16 odd percent. 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 Despite they g And even they are guiding for a similar margins. But nothing much to complain in Birlasoft. So I think tier two companies, IT companies have actually come out with a decent set of numbers, unlike their tier one names. So I think that is the only difference what we see in IT as a overall pack.
So, sir, this was IT we covered, and I think so. Viewers, we will be taking your questions. Thing is, we had a huge set of results, numbers, and for important players and for companies that we track regularly. So we'll first cover that, take commentary on that from sir, and then I'll be coming to questions. So please wait patiently over there. So, sir, from IT we move to cement pack. So cement numbers are there. I think last time Ultratech numbers we were about to discuss, so we'll discuss today in detail. So what is your take on the results produced by because टुडे एसीसी एंड अंबुजा बोथ रॉक्ड आई थिंक आज बहुत अच्छा भागे भी हैं वो लोग तो व्हाट इज योर टेक ऑन द एंटायर सीमेंट पैक एज अ होल
So I'll specifically target JK Cement because see, this is one company which has been delivering double-digit volume growth. Next 3 years, also our sense is that they'll deliver double-digit volume growth of 11%, largely because they are expanding their capacity from 21 million tons to 24. And even beyond that, also they're looking to take their capacity to 30 million tons. Now, one worry for cement companies or even for JK was that the EBITDA margins were lower, but this time the EBITDA margins have come up at 1,300 plus tons. Mind you, JK Cement is besides Ultratech is the another company which manufactures white cement. So white cement is produced by two companies only, and obviously white cement carries higher EBITDA per ton. Good part is valuations are okay at $145. So that way, I think this is one company. Our sense is that which is offering a lot more comfort at current prices, and we are quite hopeful that stock should do well. So cement overall in general, good set of numbers coming from most of the companies.
And I think your focus has always been on the smaller players. Sagar Cement is what we have reiterated that this is what looks good. So we'll be waiting for that numbers as well. After cement, sir, moving to your favorite company, favorite sector, defense, and Bharat Dynamics has produced results. What is your take? And also, sir, I'll take your target here in BDL because I know you track it very closely.
So on Bharat Dynamics, when you sort of look at revenues were okay because it improved by 30 odd percent on a lower base. Margins also were quite okay at 20%. I think the key takeaway in Bharat Dynamics is going to be what will happen in Q4 because in November last year, company guided for a top line of nearly 3,200 odd crores. What this simply implies is that you will see 100% growth in Q4. So I think that is the key quarter to be sort of watched out for, largely because I see last few quarters company has been missing on the top line or the overall ramp up and revenues has been missing, despite the fact that they are sitting on an order book of nearly 9 times their sales. Largely because of the shortage of some parts did not arrive, largely because of some of the issues in the Red Sea or on the Gulf region. But overall, our sense is that this is one stock which should sort of do very well over a period of time, trading at decent multiples of 25, 26. Will not be surprised with this getting closer to 30 kind of a multiple. We'll work with the number, but I'm telling you that.
So, sir, Jubilant Food you were covering, Jubilant Food and textile sector. Yeah.
So in the QSR space, if you look at Jubilant Food, while they have been adding stores, the pressure on the margin is still sort of there. Not that we have a formal view on the stock, but what we like in that pecking order is restaurant brand, I think Asia. So that looks a lot more better to us. I think there is a scope for margins to sort of expand further. Then the SSGs have been pretty decent.
Yes.
So, and even the longer term plans also look good. Valuation wise, also it looks relatively attractive. So that will be a sort of a preferred pick in the order.
This is
Now,
RBA, right? Sir? RBA.
yes,
Burger King,
yes,
I think, is the one
yes,
which.
yeah.
Yeah.
So on the textile front, see up till now, if you look at most of the companies are still struggling because key export market like US We haven't seen much of a growth, so that is always a challenge. But when we sort of look at numbers, our sense is that some of these spinning companies like Nathan Spinners or Vardhaman Textile ideally should do well because their margins had sort of taken a knock. And from there on, from last few quarters on, there is a sort of an improvement which we are seeing. The improvement will keep getting better in next year onwards because by that time the inventory in the US largely would be sort of absorbed, and overall the spreads of yarn to cotton, I think, should get restored to normal levels.
Yeah.
So both the companies is what we like, but they are going to take some time to sort of recoup or for their margins to normalize.
Okay. Okay. Next question is from our regular viewer, Mr. Kiran Gadge, KG sir. He's asking, is what is your view on PNC infra for next 1 to 2 years? I think PNC infra we have covered in our edition. So yes.
So last our target price was 460. I think one of the things which was holding PNC Infra from not performing was the monetization of their road asset, which I think they have already announced. What happens that it releases good amount of liquidity for them, and they are able to bid for higher projects. Now the only challenge, if you look at in the second half, the road asset bidding has not really been happening largely because of elections. But our sense is that it should pick up post-election. So that way, this company looks good to us, even with limited price performance.
Okay. Sir, one as usual question that you would even expect. View on HDFC Bank. Can we expect more downside there?
So I don't think there'll be more downside in HDFC Bank, but I've been sort of saying that look at historical outperformers, be it Asian Paints, be it Bajaj Finance, or be it HDFC Bank, or even Kotak Bank.
Hmm.
Now, Kotak Bank and HDFC Bank did well when the entire private sector bank and even the PSU counterparts were not doing well. But now you have a plethora of options within banks. So, which is why their relative attractiveness has sort of come down. Besides their normal challenges, what they are seeing at this point in time in their businesses. So, I don't expect them to sort of outperform their peers anytime soon.
Yeah.
Same is the case with Bajaj Finance. You look at, you have a lot more retail NBFCs coming into play, be it Shriram Transport Finance, be it L&T Finance, or a lot of other names. So all of them are focusing more on retail book. So you really do not have a single retail NBFC. So which is why our sense is that even Bajaj Finance also, the way it has outperformed, ideally should lag in terms of price performance. It's already trading at 5 to 6 times book, and even Asian Paints. So it has been one of the historical outperformers, but I think overall now the sense is that the stock at 3,000 levels, I think is clearly sort of underperforming. So despite being a good stock. So one should understand that if there is a overexposure in a particular stock, either by investors, be it retail
Yeah.
or institutional, somewhere down the line, that sort of has an impact on the stock, and which is what I think is clearly seen as HDFC Bank,
Yeah.
the kind of selling what we have seen, especially from the FI, because
Exactly.
that was the single most exposure stock for FIs.
Yeah, I think it was the FIS darlings. HDFC Twins were the darlings of the FIS. Now, since that report, then the results, and what is more important is the deposit side, where they are facing a big
In fact,
challenge.
in fact, we have curtailed down our target price on HDFC from 2,050 to 1,800.
Okay, so there's a downgrade from ICICI Securities on this. Sir, one question is that एक innocent सवाल जैसे उन्होंने लिखा है कि why don't अगर आप लोग नहीं ICICI बैंक पे टारगेट दोगे तो कहाँ पे हम टारगेट ले सकते हैं?
So
तो
I
सर आप ही
think.
बता दीजिए why can't we cover ICICI or any group companies of ICICI group?
So one should understand that there is a conflict of interest if we sort of recommend a particular stock and it's driven by regulation. So we can't really sort of comment on ICICI Bank being our parent.
Because anything goes up or down, we will be हमारे ऊपर ही गिरेगा उसका पूरा डंडा कि आपने ये बोला वो बोला. So that is why better not to say anything. Kiran sir is asking there was issue. What was the Tata Motors revised target? Sir, we are not yet revised the target for Tata Motors. Once the results are out, after seeing the results, Pankaj sir will definitely revise it. So let's wait for that. Please the downward. downward target of HDFC Bank, sir has given a target of 1800 from 2050. Downside, he's not expecting much, but upside also there's no much upside seeing here, and one can look at different peers in banking. That is what sir's recommendation is. So you want to say anything on that?
So I think one technical point in HDFC Bank is that it has breached last year lows. So it's not a very great sign.
Yeah.
We haven't seen the stock outperforming once this happens. And this has happened after a long period of time. So not a really great sign.
And 1460 was a very important level, and which has been taken down easily. Okay, next. So I'll take only few questions because we are running out of time. We have already breached our time by 5 minutes. So L&T you have covered almost. Budget stock picks, sir, we'll share it next week. Bank of Maharashtra also we have covered. I'm not taking that up. Chemical also we'll take it later. So the more or less we've covered almost every question. Viewers, rest questions we'll take next week because right now the time is for a hidden gem. And sir, what is our hidden gem for the week?
So for next 3 to 6 months, even for a year, I'm liking PSU banks a lot. Smaller PSU banks have done well, so which is why I think larger PSU banks should do well going forward. SBI, so there is no better bank in PSU than SBI. This is one bank which has always done better in terms of asset quality historically compared to any bank. And overall ROEs are about 1.1%. Management is confident of a 14-15% kind of a growth. And which is why I feel that this bank at current valuations ideally is a good risk-reward candidate for the next 3 to 6 months with the kind of changes we could expect. And typically, PSU banks have been under-owned by a lot of category of investors. So which is why I feel that SBI for all shareholders or for all kind of investors is a good pick to have at this point in
Absolutely.
time.
So it has almost 4x from its lows, if you see. Like, who would have expected a PSU stock being 4x from its lows? Sir, one last question. Last week, ka tha, I just forgot. We were talking about, someone had asked about ETFs last week, and you said that you will get back with certain ETFs after checking with the team. So have you got a chance to check that? If not, then next week for sure we'll do that.
So I think if you can ask the viewer to sort of put a test mail, so I'll respond to that.
Okay, so sir, what would be the email address? I'll just put it in the text box.
So it's pankaj.pandey@ICICIsecurities.com.
Okay, I'll just put it in the chat. So, sir, you can just mail it to Pankaj sir directly. Pankaj.Pandey, Pandey with a Y @ICICIsecurities.com. Okay, I've put the mail ID of Pankaj sir in the text box. You guys can look at, you can get any queries that you have, you can definitely mail it to him. And obviously, it should be a sensible query. Only sensible queries would be addressed. And I hope you get that. So, sir, as usual, we wind up our market wrap today early because we have a long weekend from tomorrow. Wishing you and viewers a very happy Republic Day and a great budget session or the next hopeful positive next week.
Absolutely.
Yeah. Thank you.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.